What's going on, everyone? My name's Obi and welcome back to Courtside Financial. Today we're going to be talking about 4 companies that I'm watching right now with all the market volatility going on. If you're new to the channel, make sure you hit that subscribe button so you don't miss out on any videos, and also make sure you hit the like button because it really does go a long way in helping out the channel. Lastly, if you want to be a part of the conversation before it happens here on YouTube, click the link in the description to join the free Courtside Financial Discord. When you open up your new brokerage account, you'll receive 1 free stock valued anywhere from $2.50 to $250. And when you make that initial deposit of $100 or more, you'll receive another free stock, and this free stock will be valued anywhere from $8 to $1,600. Lastly, cryptocurrency is now available on WeBull, so you can trade cryptocurrency on the platform with 0 commission. So I'm just going to get straight into the video here today. I'm not putting these companies in any specific order, but I'm saving my favorite and the best, in my opinion, for last. And if you guys watch this channel or follow this channel at all, it probably won't be a surprise to most of you. So the first company that I'm going to talk about is Clover Health. I've been digging into this company a lot recently, and I finally started a position in it today. And let me just say that every company that I'm talking about today here in this video, for me personally, they are long-term investments, which means that I'm trying to look a little further down the road with these. And then I'll also say that none of this is investment or financial advice. Don't buy a company just because I'm buying it or I'm holding it. It's super important to do your own research and come to your own conclusions. So Clover Health, this is a Medicare company that was taken public via SPAC by Chamath Palihapitiya and Social Capital. The stock had highs of $17.50 and it came crashing down all the way to where it is today. After it was attacked by short seller Hindenburg Research. To the best of my knowledge, there's still an ongoing investigation into the company from the SEC. I did a completely separate video on that. It's about 20 minutes if you want to get my thoughts on it. Obviously, I still invested in the company, but Clover Health has since disputed all of the arguments that the short selling firm has made. And they recently reported their 2020 financials, so we have a better understanding of what's actually happening inside the business from a financial perspective. But in my opinion, the biggest headwind that they face right now is overcoming this ongoing SEC investigation and these allegations from the short selling firm. As far as their 2020 financials, I thought that they were pretty good. Operating expense only increased by around 3% year over year when compared to 2019. So that sounds like a good trade-off to me. 3% increase in operating expenses, but at the same time, you're increasing revenue by 45%, and at the same time, you're decreasing net loss by 75%. And of course, that's year over year, so from 2019 to 2020. But so Clover, what is so good about Clover? Really what's insufficient in the healthcare space is that business value doesn't always translate to consumer value. So they're a Medicare provider and they're 45% cheaper than Medicare, and then on the private end of things, they're 17% cheaper than the nearest competitor. So why wouldn't people want cheaper Medicare is the way that I kind of look at that. And on top of that, it's a market that's expected to grow exponentially. There's only over 21 million people who are eligible for Medicare right now out of around like the 62 million people in the world. So, you know, as time goes on and people are living longer, more people are going to need to be placed on Medicare. I see Clover personally getting a disproportionate share of this market because why wouldn't people go for the cheapest alternative? So we've talked about how Clover is bringing value to their patients. Now we're going to talk about how they're bringing value to the physicians, which in turn bring even more value to the patients. They have their proprietary software, Clover Assistant, which helps reduce variability in decision-making of physicians. If someone goes to 3 different physicians, they're probably going to get 3 different diagnoses. 19 out of every 100 visits it's being used, so it has a pretty high utilization rate. And on top of that, it's software, so Clover is gaining more and more data as more physicians start using it. They start putting that information into it. They also learn from those physicians, and every 3 to 4 weeks they update the software. So I think that a super fast iteration rate is something that's very helpful in technology companies these days. How quickly can you test your stuff in the real world, get your feedback, and make it even better? That's something that Clover is doing really well. The next company that I'll talk about is Tough Built Industries. This is a company that's kind of pretty easy to understand. They sell construction equipment and construction supplies. Recently, demand for their product has been through the roof. In Q3, they had their first quarter of profitability, and if you watch my channel or any of the Tough Built videos, I've been saying that I'm predicting that Q4 is going to be their biggest quarter ever, even before they put out the Amazon numbers, but I'll get to that in a second as well. So when I talked about the Amazon numbers for the first time, I said it looks like more people are actually buying these Amazon products in Q4 because you don't raise prices unless there's demand. So a month or two ago, it was recently announced their 2020 Amazon sales. The only figure that we were missing was Q4. So if you do the math, they did about $2.5 million in gross sales on Amazon alone in Q4. And like I said, alone, so they actually have other distribution channels, physical distribution channels like Lowe's and Home Depot. And if you go on those websites, the products all have really good reviews. So to me, that's an indicator of that, hey, these products are really good and they're selling well. Now, Maxim Equity Research, they actually gave Tough Built a price target of $2.50, which suggests more than a 2x upside from the current price that it's at today. Is because that they think their strategic partnership with places like Lowe's will serve as catalyst for growth. Obviously, I do too. The company is just continuously innovating and releasing more products, so I wouldn't be surprised if over the next decade they become one of the biggest names in construction. So the next company here is UXIN, what a lot of people refer to as the Vroom or Carvana of China. This one was an idea that came across my desk, and as I started doing my own research and reading into it, I just became more and more interested in this company. So obviously the used car market in China is an emerging market. The US is like 25 or 30 years ahead of China, and we're pretty far ahead of them in terms of our automotive market as well. But through government policy, China is encouraging people to actually buy used cars right now, and they want to build a $306 billion used car market from scratch, which would be 2x of what it is today. How are they incentivizing people to buy used cars? Through financial incentives, of course. If you buy a used car in China, you're going to pay 0.5% in taxes versus paying 17% tax on a new car. So financially speaking, it makes more sense to buy a used car over there in China, and probably in a lot of places as well. Now, there's a lot of things to talk about when it comes to UXIN as well, like the fact that I think that they could potentially become a big exporter of used cars from China. Obviously, China wants to switch over to electric, but they have to take care of what's in the ecosystem and do it in a responsible way. And they're also encouraging these used car companies to start exporting, and UXIN actually hopped on the bandwagon of exporting cars last year when they announced that they would be exporting cars to Europe. I read an article a few months ago that said China will become the world's used car salesman or used car exporter. So I think there's a lot of opportunity for UXIN there, and like UXIN is poised and presented as a global company as well, so I don't think that's a stretch at all. But recently, UXIN has had a lot of dramatic changes when it came to their business, and obviously for me, that's why it's valued where it is today, because it's risky, it's a turnaround play. But some of these changes include getting rid of all their offline sales channels. They're strictly doing things through the website or app, which the company says that they feel like will lead to more profitability down the road. This, in my opinion, is a top-notch EV play. I can't get into everything in this video because there's so much to talk about when it comes to NIO. The business has so many arms and legs and so many different things going on. But there's hours and hours of NIO content on this channel, and I'll continue to create more and more hours of NIO content on this channel. So if you want, you can feel free to check that out. But I'm going to talk about a few things that I think are really important in NIO. Originally, NIO was touted as the Tesla of China, and that really doesn't make sense when you look at it, because they're just considering Tesla as an EV company and NIO as an EV company, but in the future, every company will be an EV company. But yeah, with NIO and Tesla, there are a lot of differences. Tesla is a company that's vertically integrated. They're trying to vertically integrate the battery supply chain. NIO is a company that leverages their strategic partners to help them win the day. So mobility as a service, that's expected to be a $10 trillion market by the early 2030s by ARK Invest. When I mentioned strategic partnerships, NIO has a partnership with Intel's Mobileye, and they're supposed to supply them with cars to build out their own robotaxi network. And in my opinion, they're going to get a nice share of that market. But more importantly, if we're thinking a little bit more near term, NIO is the king of battery swap. They pretty much are the company that championed battery swapping And now we're seeing other companies like Geely Automotive. So why am I so bullish on battery swapping, you ask? Well, there's actually a plethora of reasons. I'll try to cover it as best as I can. I'm not trying to make this video too long or make it all about NIO. Number one is it's not about just getting range as fast as you can get range by quickly swapping out your battery in about 4.5, 5 minutes, something like that. It's actually more so about, when you're thinking from the perspective of a consumer, it's more so about battery degradation and not having to worry about that. So I was actually in the market for a car. I actually bought a car today. And I was looking at Teslas for a while, and I opted out of buying it, and I said I'll wait to get an electric car. When you think about what they typically use these days, it's lithium-ion batteries. Lithium-ion batteries, they lose performance, they lose range over time. They're not so good in cold weather. And then on top of that, the biggest piece, like I said, is degradation. If you buy a Tesla today, you're pretty much going to be stuck with that battery that you have, even when better battery technology comes out over time. And that's because those batteries are not swappable. Over time, these branch-like structures form in the battery, and they're called dendrites, and those actually reduce battery performance. With NIO, like I said, users don't have to worry about battery degradation over time. User can just go swap out his battery at a battery swapping station, and you can do that frequently. In some cases, you'll have to pay for it. In some cases, you'll have to pay for it. The earlier users have lifetime battery swap. Now you get about a handful of battery swaps per month. Now, if I'm constantly swapping my battery out, I don't really care about the battery's health over time. That's the first piece of it. Now, the second piece of it is, as time goes on, like I said, battery technology is improving. Eventually we could get to a state where all we see is solid state batteries instead of lithium-ion batteries or some other type of alternative. As I mentioned with the Tesla, you're going to be pretty much stuck with that battery that you have when you bought that 2020 Tesla or that 2021 Tesla. With NIO, battery as a service is huge. Batteries are swappable and upgradable. A NIO user can actually go and upgrade their battery, and that's going to dramatically improve the lifespan of the car. On top of that, if you think about financing a car, if anything goes wrong with that car, it's not on you to fix it. It's on the dealer to fix it. Well, NIO is essentially doing the same thing here with batteries, with battery as a service. Users can lease the battery, buy the car, reduce their upfront payment by about 15%. And the best part is, like I just said, you don't have to worry about degradation. That's on the company. So this is something that really is going to give a lot of users like peace of mind, for lack of a better term. But I'm someone who likes to keep my cars for a long period of time to save money. And let's say that you can replace the battery in that Tesla. Well, as of today, the battery is the most expensive part of the car right now. So going to a Tesla service station and trying to get your battery switched out, it's going to be very expensive. NIO switching out batteries, that happens every day. So for me personally, if NIO was in North America today, I would have bought one literally today. Now, as I mentioned, there's a ton of reasons why I like NIO. I think in one of the earliest videos that I ever did, I said that with Tesla, people missed out on the opportunity in the run-up, including myself, because they failed to value it as a technology company. And I didn't want to make the same mistake with NIO, and sure enough, look where we are today. I didn't make the same mistake with NIO. You have to also understand that NIO has a stake in a battery asset management company. You have to also understand that NIO owns 100% of XPT Motors, which is a top electric driving system company. You have to also understand that NIO is a lifestyle brand and an e-commerce brand. And back to the battery asset management company, that's a 2 trillion RMB market as quoted by management. And I mentioned earlier when I was talking about NIO that they are getting into that robo-taxi network with Mobileye, so they're going to benefit from that as a growing market as well. So in my opinion, when I think about this company, I feel like there's a lot of reasons to kind of diamond hand NIO. So that's going to be it for this video. I want to know what you guys think about these companies down below. Make sure you hit the like button, make sure you hit the subscribe button, leave me a comment down below. And as always, thanks for watching. I'll catch you in the next video.